apply for a credit card? Most importantly, when do you actually need to apply for a credit card for your business? Well, there's actually 6 different times that you really should use as triggers to know that it's time to actually go and get a business credit card. So if you've ever been in this situation where you don't know if you should get a credit line, a loan, or a credit card, or when you should be applying, well, you're going to love this training because we're going to break down these 6 different times that you should be using as triggers to know it's time to get a business credit card. Look, you don't want to mess this up. We've all heard before that lenders don't want to lend you money when you really need it. Well, that's because most people are applying for money at the worst time you could actually apply for money. That's the mistake you need to avoid. And during today's training, I'm going to help you overcome that and not even make that mistake by knowing these 6 times to apply. If you apply during these sweet spots, it's going to be the best time for you. What that means, it means that you have a better chance of approval and a better chance of getting more money at better terms or optimal capital to be able to grow your business. So when is the best time to apply for credit cards? Well, there's 6 different times, and we're going to dive into them all right now. So let's jump in and let's get started. So number 1 time that you should be applying for a business credit card is when you start the business. When you open your business, you need to be applying for a business credit card. And here is why. Because what happens is you need to start making the transition from using consumer credit to commercial credit. This is one of the top 3 mistakes I see business owners make. They start a business, they use personal credit cards to fund it. Here's why this goes wrong. Because first of all, being a seasoned entrepreneur for decades, having multiple 7 and 8 figures that businesses that I built and exited, I can tell you that it always takes twice as long, if not more, to get to a result you think you're going to get to. And it also costs twice as much money as what you typically think it'll cost. So what happens is when you launch a business, you might say, hey, I can generate my first customers within 60 days, and it's going to take me $10,000 to launch this. But what really happens is when you get into it, you're 15, 20, 25,000 in instead of the 10 you thought it would cost. And then 2 months comes and goes, and 3 months, and 4 months, and you could be 4, 5, 6 months before you get your first money in the door. This happens all the time, where entrepreneurs misgauge how much something will cost or how long something will take. And so then what happens is you're using more and more and more of your consumer credit limits and lowering your consumer score lower and lower and lower. And before you realize you're too far gone and you try to go get other kind of financing like a business credit card, like loans, then your credit score is so low you can't do those things. I'm telling you, it's one of the primary mistakes I see business owners make, and it all starts from trying to use personal credit to fund the business. Listen, personal credit was not designed to fund a business. This is why business credit exists. Business credit has limits 10 to 100 times higher than consumer credit. Okay, our clients get credit limits of $5,000 to $10,000 30 days or 60 days into starting to build business credit. You as a consumer would never start a credit report and get $5,000 to $10,000 limits 2 months later, 1 month later. But this happens because the limits on business accounts are so much higher. So if you're going to fund a business, you want to start getting a business credit card the minute you actually launch the business. You should start building business credit immediately. You should go out to get your first business credit cards immediately when you first start the business. Now, keep in mind, there's a couple different ways to do this. There's the personal guarantee route. Well, the route here requires good credit. So if you're going to go in and get credit card stacking or go to Chase or Bank of America to get a credit card, they're going to want you to have good credit. 680, 700, the minimum, 720 FICO, probably preferred to get one of these cards. The other route is we go the no PG route, the no personal guarantee route. This is where we're starting to get starter vendor credit. This is where we're starting to get credit at every major retailer. This is where we get to a Visa card, a MasterCard, an American Express, and about 4 to 6 months, if you have proper guidance, you get to that end result in about 4 to 6 months. Now, the part about this route is it doesn't require personal guarantees. It doesn't require credit checks. You can get this without revenue, without credit, without having any kind of collateral. So again, there's 2 routes you can take. You could start building business credit right away and getting credit cards that don't require a guarantee, or go through a program like Credit Line Hybrid where you can actually get a bunch of credit cards right from the get-go from starting your business, or go to Bank of America, Chase, get 1 credit card. But the time to start getting your business credit cards is month 1 when you start your business. It's where you want to jump in and get going. And if you want help, I'll throw this up really quick. Here's a step-by-step, basically blueprint to building your business credit. So if you're interested in building the business credit and getting credit right out the gate without a personal guarantee and credit check. From the moment you start the business, this is the blueprint on how to do this. It's been downloaded over 1 million times. So it's kind of like the Bible on business credit building. Now, the second time you should be applying for a business credit card is when you have to make major purchases. So if you're going to make some kind of major purchase, well, this is the time that you really want to be thinking about actually getting a business credit card to possibly lift that weight so you don't have to use loans and credit lines. Now, here's why this is important. It's important because loans and credit lines are way freaking harder to get than business credit cards are. If we look at the ease of capital, the ease of getting money for your business, here's the order you could basically take. The easiest kind of money you could ever get for your business is called asset-based lending. You have something that's an asset that can be pledged as collateral. Stocks, bonds, 401ks, IRAs, cryptocurrency, you get the idea. That's the easiest money to get. Lenders don't care about credit. They don't care about revenue. All they care about is that you have the asset that you're actually leveraging. And if you have the asset, it's the easiest money to get. Second easiest money to get, business credit cards. Like especially the ones without the personal guarantee and credit check, because anybody can start building business credit right away. Then we start to get the loans. Then we get to credit lines. Everybody wants a credit line. But here's the problem. Credit lines are the hardest kind of business financing you're going to get. Most credit lines, you're going to have at least 6 months, most of them a year's worth of revenue. A lot of them want you to have tax returns for at least a year. Being a low risk industry, have good personal credit, they're freaking hard to get. But what's the difference between a credit card and a credit line? Minimum. A credit card will actually have that let you take cash out, but they charge you like 20%. Main benefit of a credit line, you could take cash out without paying the 20%. Benefit of a credit card is 0% interest for up to 18 months. Credit lines don't have that. So if you really look at the main difference between a credit line and a credit line, you could take cash out of. A credit card, you get 0% interest. It's the main benefit that one has that the other doesn't. Now, do you care about taking cash out? Be honest with yourself. What circumstances do you actually need cash that you couldn't use credit to buy? I'll give you an example. Okay, I can't buy a property on a credit card. Can't do it. The title company will not accept a credit card to buy a property. There's an example. I actually need cash to buy a property if I'm a real estate investor. I can't use a credit card for that. But outside of that example, like there's not a lot of situations where you couldn't use a credit card to buy what you need to buy, where you'd have to have cash and have to have a credit line. So stop becoming fixed on credit lines and get the easier path, which is credit cards. And when you're going to make a major purchase that's not equipment or something that there's a specialized kind of financing you could get for that purpose, then make sure that you're actually coming in and making sure that you're getting a business credit card to help you with that. Get the easiest kind of financing to carry most of the weight in your business for you. Now you need a little bit of money from loans and credit lines for the rest of the stuff. And if you follow this strategy, it's going to be a way easier path to capital because you're not banging your head against a wall trying to get loans and credit lines that you may never get or very difficult to get. You're taking the easy path of business credit and credit cards to fund the way. Then you just need a little bit of money from loans and credit lines, which is way easier to get when it's a smaller amount than coming out the gate as a startup trying to get a $150,000 credit line. So number one, make sure you get credit cards when you start the business. No, so you stop using personal credit. And so you start building a business credit profile and score that makes you lendable. Number two, use a business credit card or get one when you have a major purchase to make, and make that major purchase on a credit card, not a loan or a credit line, because loans or credit lines are harder to get. And we want to save those for the circumstances where we actually need to be able to use those because we're not able to come in and really as easily get loans and credit lines. Okay. And by the way, Gary, what is up? Thanks for coming in and saying hello from LinkedIn. And Brenda Taylor's in the house. Hello from YouTube. Thanks for coming in and saying hi. If you're just coming in, give me your company name in the chat and I'll say it right here on the live stream. And then thousands of people see the replay and it's like free advertising for you. Can't complain about that just by taking 5 seconds to drop your company name in the chat. Number 3 time to get a business credit card is when you have steady revenue. Look, a lot of big banks that want to lend you money, they want to know that you've got consistent revenue now. And if you've got consistent revenue now, wow, a massive amount of funding opens up. So I think of funding like this. I've spent my life in financial services, and this is what I think about. When you have a strength, you unlock an entire category of funding. So your goal as an entrepreneur is to unlock as many categories of funding as you can get. For one, this gives us more access to capital. And two, it gives us more options where we can choose the better capital for us, longer term, lower rates, right? So revenue unlocks a massive category of financing. We can get SBA loans, we can get term loans, we can get revenue lending, we can get merchant cash advances, we can get AI credit lines like Bluevine and AI credit lines from places like Fundbox. I can go on and on and on. But revenue unlocks this entire category of funding for you. And so you want to wait till you have about 6 months worth of revenue. And when you've got about 6 months worth of consistent revenue, it's a good time to start looking at any kind of revenue lending financing. And you definitely want to look at opening a business credit card here or more, because these applications are going to ask what your revenue is. And when you're able to say that I make 20 grand a month or 50 grand a month or 10 grand a month, then you have a significantly better chance of getting approved. Here's why. Because most people don't get there. Most people start a business and abandon and quit. So when they know that you're in it for 6 months, a year, and you're actually starting to generate revenue, well, you've already got past the hurdle that 80% of people that start don't ever even get past. Now they know that you're in it to win it, and now you have a significantly better chance of getting approved and getting better rates, because the lender can actually see that you're not just going from experimenting with the business idea, you're building it. You're actually scaling. You're building and scaling a business, something a very minute percentage of entrepreneurs get to. And when you get there, you're rewarded by getting approvals from lenders and credit issuers, especially on business credit cards. And by the way, Brandy McQueen, I love that name. I love that last name, McQueen. Brandy, thanks for coming in and saying hi from Facebook. And Joel Smith's in the house from Credit One. Credit One. I love it. Credit One. WON. That's freaking smart play on a name right there. Credit One. WON. I love that, Joel. Congratulations. Brenda, don't have one yet. Have to learn how to. Well, we're going to teach you that too. And if you want to, you can grab our free guide at creditsuite.com/EIN. First step of business credit building is to set up your business where it's credibly, and that guide will absolutely give you all of the step-by-step process to do so. So number 4, when expanding your business. So a good buddy of mine, Sam, owns a martial arts studio called Dragon Gym. Isn't that freaking awesome? Dragon Gym is like the coolest name ever. I finally convinced him to go get a bunch of swag, and now he sells it and makes a bunch of money, and then he gives me free swag. So my son and I are seen running around Tampa in Dragon Gym clothes as a result of this. So Sam came to me, and we were talking in a mastermind, and he said, hey, I'm looking to expand. Now, he had he bought the gym from his mentor, from his guru. I forget what they call him in the martial arts world, like his sensei, right? Him and my other buddy, Lonnie, they went in as partners that were students and bought this martial arts gym. Thing's been around since the 70s, right? This was, 10 years ago. So you got to keep in mind, this gym has been open for 40 years. They buy it. And then they say, I want to expand. So what we're going to do is in 2 years, we are going to open another location. And I say, Sam, why are you waiting 2 years to open another location? And he said, because we need the money. We're taking the profits and we're saving them. And we think 2 years we'll open another location. I said, that's nonsense. I said, let's talk about business credit cards. We went in and we got him a bunch of business credit cards at one time. This is called credit card stacking. We call it credit line hybrid. It goes by a lot of different names. And what he did was that he got all this credit at 0% and used it to open up his second location. Sure enough, the second location was profitable. He used the money. He paid down the credit. And then guess what he did? Third location. This is a man that wanted to open one location in 2 years. He used credit to open 2 other locations in 18 months. So not only did he cut down the time that he was using to expand, but he ended up doubling the expansion plans he had. Now, last time I talked to Sam was, I think, in October, and I think he had 4 or 5 locations, and now he's looking to franchise the business. That is a wise use of business credit cards. Instead of waiting and collecting his profits for 2 years to expand, he used credit cards to do it. Within 6 months, he had another location open. That was so profitable, they opened a third location in 18 months. That is the way you get to rapid expansion, and you can do exactly the same thing. So if you're looking to expand the business, if you're looking to acquire a competitor, if you're looking to bring manufacturing in-house, if you're looking to open another location, well, credit cards can pay a large part of that cost for you. And again, it's easier to get credit cards than loans or credit lines. So this is an easier and faster path. It's what took Master Sam from 2 years to open one location to opening 2 extra locations in 18 months. So a really good idea that when it comes time to expand your business, that you're actually using credit cards and getting them then to be able to do so. And by the way, Brenda, hello again. I just saw your comment, but I've already answered that comment. So again, if you're just showing up, give me your company name in the comments, and I'm going to give you a shout out on the live stream and help you get like a bunch of free exposure. So that brings me to the number 5 reason or time that you want to apply for credit cards. And this is if you need to build business credit. Okay, if you're looking to build business credit profile and score for your business, you should be getting business credit cards that report to the business credit reporting agencies to be able to do it. Okay, that is vital. So why do we even want to have a business credit profile and score? Well, because it's everything. First of all, 3 reasons from a lender's perspective. Lenders determine how much money you should be approved for based on business credit quality. Lenders determine if you'll be approved or denied based on business credit quality. Lenders and credit issuers determine how much money you should be given and the rates you'll pay based on business credit quality. So business credit, having a business credit report and score and a history that your business pays its own bills on time is the key to getting more approvals, higher approval amounts, and better terms. So if you're not getting approved as much as you want to, or you're getting approvals, but they're 20, 30, 40, 50% cash advance fees, or you're getting approvals, but they're not as high as you'd like them to be, well, business credit's the culprit. That's why you want to build business credit. But there's a lot of other reasons you want to too. Business credit helps you separate your consumer and commercial credit. It helps your business stand on its own. So we don't need these personal guarantees. We don't need personal credit checks from you. Business credit helps us get our business where it can fund itself. What do I mean by that? Well, if you're trying to get funding for your business right now, you probably need to have your revenue. You probably need to have collateral. You probably need to come in and have consumer credit quality and use your consumer credit, right? That's using you and your assets and your credit, and you to get money. But business credit, you don't need any of that. Just by building a business credit profile, the profile itself helps you get more money. So what we're doing is we're building something out of nothing, a credit profile for the business, then we're using it as the major way to get more money. So the business credit profile is helping the business fund itself because we created the asset that is used to get us the money. We're not relying on us having stocks, bonds, 401ks, IRAs, using our house as equity. We're not relying on anything on our personal side. We're creating a credit profile and letting the profile that we built actually be used to fund the business. The business is literally and legitimately funding itself. The other thing to keep in mind is that your business credit is your reputation. What I mean by that is that it's publicly accessible. If I want to get your business credit report right now, I don't need your permission. I don't have to, you don't have to know about it. I can go look at your company on Dun & Bradstreet and immediately pull your credit profile and score. I mean, look, we're teamed up with Dun & Bradstreet. I get 25,000 D&B credit reports for free every single year. So I pull credit reports on anybody I want to. And it's 100% legal because it's publicly accessible information. Your competitors, your prospects, your clients, potential buyers of your company, potential investors, they're all looking at your business credit reports and scores. So we want to build business credit because it helps us get more approvals and higher approval amounts and better terms. We want to build business credit because we get away from personal guarantees and credit checks. We want to build business credit because we're able to get our business to fund itself, and 90% of what we need to buy for our business credit can buy, which makes it way easier for us to get the money we need without relying on loans and credit lines, then save the loans and credit lines for when we desperately and really need money. So if you need to build your business credit, if you see the value of business credit and you want to build it, well, business credit cards can help you get there. It might be a vendor credit card at a store. It might be credit card stacking. It may be a Bank of America credit card that reports to a business credit reporting agency. Just know that if you're using credit cards to build your business credit, you need to make sure that you're asking the credit issuer where they report the credit that you're getting. You don't want to get anybody that reports on the consumer credit reports. Capital One Spark card sucks. It reports on consumer and commercial business credit reports. Why does that suck? Because what happens is when there's a balance on that, it's hurting my personal credit scores. I don't want that. I want the Chase card that reports to the business credit reporting agencies, not the consumer. Matter of fact, whenever I come in and do anything relating to getting a new credit card, I always ask them where it reports to. And if it doesn't report to a business credit reporting agency, I'm not even interested. The last credit card offer I got, I liked it. It was from PNC Bank. And I called him and I said, hey, do you use business credit to make your approval decision, or do you have to pull my personal credit? Second question, where do you report my payments? The minute they said, we report payments on your TransUnion consumer credit report, I said, then this isn't a real business credit card. Why would you take a credit card that's designed for my business and report it on my personal credit report? That's not a real credit card. So I won't get anything that reports on my consumer reports. I only get the credit on my business credit reports. It reports there unless I really need money. Then if I need as much money as I can get, then I don't care. But if that's not my case, then I really want to get counts that report on the business credit reporting agencies, not the consumer. And 77 Tatum says, hey, I have a new NAV card. Plaid is plugged into my Chase Bank checking and is now up to $800 per month. When I spend on the card, it automatically pays from Chase card, no credit check. So that's fantastic. So I'm going to pull this up because 77 Tatums, and by the way, thank you for this, just gave us all a really cool tip and piece of advice that you want to look at this comment, check it out, and you might want to check this out because it's an easy way to be able to get this credit card he's talking about. And 77 Tatum says, this is no personal guarantee, EIN only. So just gave you a phenomenal solution to help you get one of your first business credit cards. And also NAV Prime reports to Dunn, Bradstreet, Equifax, and also Experian. NAV Prime is where NAV actually reports your payments for your credit monitoring to the business credit reporting agencies. So you know. Now you go to creditsuite.com/monitoring to get to NAV. That's a shortcut. You can also go to NAV Direct, but NAV can actually take your payments to them for credit monitoring and report it to the business credit reporting agencies. That's what 77 Adams is saying. And also, Amex sucks. So does Business Blue print block on deck reports. Okay, so on deck does report to the business credit reporting agencies and will decline you based on business credit quality. And 717 Adams is 100% spot on. The reason that we don't even really provide and promote American Express for business owners is that you usually need years in business and millions in revenue to get it. And so do they have them? Yeah, they've got no personal guarantee credit cards. They absolutely do. But you have to be really well established, millions in business and years in time in business. So I don't talk about them a lot because I think most of us entrepreneurs that are watching this, we're not there yet. We're not to a position where we can get that, which is why I agree with you. Amex is not the best card in the beginning. It's a very well-established business down the road. So that brings me to number 6, and then we're going to do a recap. Number 6 time that is the right time to apply for a business credit card, and this is during promotional periods, right? So promotional periods are where we get some kind of incentive for getting that credit card. A perfect and best example is 0% rates. I don't want to go get a 0% rate card when I'm not planning on using that card for anything. But if I know right now I'm going to make a big purchase, buy real estate, for example, well, then now I probably want to get 0%. I want to get the card where I'm going to make a major purchase because I want that major purchase to be purchased at 0%. And that 0% only lasts for 6, 12, or 18 months. So during a promotional period, it makes a lot of sense. Sometimes like Southwest Airlines sends me something that says, hey, if I get this credit card right now, I get 100,000 bonus miles, right? That's a promotional period, right? If I get this credit card now, I get double points on all my spends. That's a promotional offer. So what we want to look at is if depending on how we use the accounts we have, well, then promotional periods can make a lot of sense. So for example, if I fly Southwest Airlines a lot and I'm almost to the next tier of Southwest Airlines and I need 50,000 points to get there, and just by getting this credit card, I get 100,000 points, I'm going to do it. Because the promotional period helps me get to the next level of where I want to get to, right? If I'm a real estate investor, I'm going to buy real estate and I find the perfect property to buy. Well, now's the time to get that 0% card because I can get it and take the cash out at 0% and use it to be able to come in and buy that actual property. So you get the idea is that during promotional periods, depending on what the promotion is and the benefit to you, you really might want to consider those offers if the benefits being offered are relative to what you're actually doing. I stay at Marriott's. Okay, I fly American Airlines. I travel a freaking lot, like a lot. Like I'm usually gone at least every week or every other week. I'm on a plane going somewhere, right? So for me, if I get a good promotional offer for American Airlines or for Marriott, I'm probably going to consider getting that credit card because that's really relative to what I actually am using my credit for. So again, during promotional periods is a fantastic time and the 6th different occurrence of when you really want to consider getting a business credit card. And by the way, 770 Adams says, hey, you can use On Deck and do a business line of credit, but you can pay it off with Amex business line of credit. On Deck charges 41%. Amex charges 14%. Smart strategy for the business line of credit. You can use Amex, but it won't report where it counts. And again, great point. I'm going to throw that advice up here. And also, meaning Business Blueprint, it's a game. I have failed so much, but learned. Yes, it is a game. Unfortunately, it is a game. But it's about strategic use of capital. And that's what I like to say. It's about strategic use of personal guarantee, strategic use of capital. And that's really what we're talking about, is a smarter way to get the money you need to grow the business. A smarter way to get the money you need to grow a business is get the easiest kind of money you can get, business credit cards. And then you don't need loans and credit lines as much. Then it's easier to get what you need when you need it, and then not get the other stuff that's harder to get until down the road. So some things to consider. Okay, so let's do a recap. The 6 times when you want to apply for a business credit card. Number 1, when you first start the business. Get away from consumer credit cards. You don't want to use them. They hurt your personal credit. Immediately come in and get your first business credit card. Number 2, when you make a major purchase, right? You get 0% intro periods typically when you first get the credit card. So when you make a major purchase, don't use loans, don't use credit lines, don't use cash. Get a business credit card. It's the easiest way to get it. And if you do it right, you get 0% financing. You can make that major purchase at 0%, maybe even pay it off before interest even accrues. Number 3, when you have a steady stream of income. That's what lenders want. Lenders and credit issuers want your business to be generating revenue. That unlocks this entire this whole different array of funding that's available based on revenue. So when you're generating revenue, it's more likely that you'll get higher limits and be able to get better terms because your business is actually generating revenue at this point. Number 4, when you're expanding your business. My buddy Sam did it, right? He opened 2 additional martial arts studios in 18 months because he used credit cards, multiple credit cards to do it. He didn't wait for cash to accrue. He didn't try to go out and get loans and credit lines that were harder to get. He used credit cards to do it. So you can definitely use that to be able to acquire a competitor, to be able to come in and be able to buy equipment or to buy other things that you need to expand the business. So consider using credit cards. It's an easier path to get you to the expansion mode. And also number 5, if you need to build business credit, remember, business credit's the key with getting more approvals, higher approval amounts, and better terms. So you really want to make sure that you're building business credit, because that's what the key to you basically getting away from personal guarantees, getting away from credit checks, creating an asset where your business can fund itself. And also on top of that, it helps make you more lendable. So you need to be building business credit. You're going to need credit cards to do it. And that brings me to number 6, during promo periods, 0%. Get this many miles, get this many points, get this much cash back if you get the card during this time period. That makes sense if the reward you're getting is something you actually want. Like I said, I'm an American Airlines guy. I'm a Marriott guy. So if I had the right offer for Marriott points or for points with American Airlines, I'm probably going to take it, especially if that's what moves me up to another tier. Then it makes sense for me to actually do it. So there you have it. There's the 6 times when it's right for you to apply for a business credit card. And let me see if you have any other questions. Get them typed in here. The 770 Adam says, on all your points, this is your guy right here. I appreciate that. So look, as 770 Adam says, this is a game. It's a game you've got to learn. And 770 Adam says, here's all the things I've learned from my experience. My goal is to help you shortcut your learning curve, to come on here and take the accumulation of 60,000 entrepreneurs we've helped in recent years with this and say, here's what I learned from all of them. Here's what you can learn to shortcut the process so you can get better results faster. So did you get value from this training? If so, make sure you like and subscribe, and then keep your eye out for our next training, because every Tuesday and Thursday at 1 o'clock Eastern, we are live right here on your channel of choice, on YouTube, on LinkedIn, on Facebook. So make sure if you missed any part of this, you go back and watch it in its entirety, and keep your eye out for our next training where we talk about more cool ways to get the money you need to start and grow your business. Thanks for coming in. Thanks for